Smucker, Campbell's, and Chewy are all reporting earnings this week as deflation looms for consumer goods companies. All three showing a stark decline year to date, leaving the companies to reevaluate their branding and marketing strategies going into 2024. For more on today's consumer goods earnings, we're talking to CFRA Analyst Arun Sundaram. Arun, it is great to see you. Maybe Arun, just to start kind of big picture here, I want to get your take on the consumer because, Arun, you have a unique insight there given your coverage universe. How does the consumer look to you, Arun, right now, and what do you see ahead in 2024?
Yeah, thanks for having me. Yeah, so I think the big word for this year is resiliency. It's been the best word to describe the consumer this year. In the face of high inflation, elevated interest rates, they've been spending. Although that spending has been shifting more towards services again and away from goods. But nonetheless, consumers have been spending this year, and that's continued even through this holiday season. And now the big question really is what's in store for 2024. And in our view, there certainly are some red flags towards consumer spending. We'll likely see consumer spending even soften even more in 2024. As you know, savings rates have come down. Consumer debt balances are increasing. A lot of the excess savings that the consumers built up during the pandemic have been depleted. If you look at some leading indicators like sentiment and confidence, both indicators are generally weak right now. So we're expecting consumer spending to slow in 2024, and especially in the services side, because that's been the area that's been, that was a positive in 2023. It was the services side.
So consumer spending, consumer demand is one side of it. The other side of it is what the companies have been charging, right? Which last year they certainly had pricing power. Beginning of this year, there was some pricing power. That, though, seems to now be melting away to some extent, hand in hand, of course, with what's happening with demand. Are we going to see deflation affect these companies going into 2024?
Yeah, so I think you're right. So I mean, clearly, just about every consumer-related name increased prices over the last 2 years. Some companies probably increased prices more than they should have, given their brand strength. And I think we're starting to see that now really play out, is because the companies that don't have pricing power are starting to see volumes, really deteriorate. The expectation right now is that the inflation is moderating, and the expectation was that units or volume should improve, but we really haven't seen that for a lot of consumer-related names, especially packaged food companies, which is one of the reasons packaged foods has been down so much this year, is because even though price-related growth is moderating, we're not seeing that uplift in volumes, and in turn, overall growth is coming down. But yeah, in 2024, I think the big buzzword now is deflation, and if we can be in that point. Already in some consumer-related categories, we are seeing deflation, especially in discretionary categories. If you think about things like electronics, TVs, household appliances, those have been deflationary for the most part throughout this year. I think going into 2024, we can start to see more disinflation in consumables and food, and potentially maybe mid to late 2024, we could see deflation in food-related categories. Food-related inflation has been the most persistent. So I think that's going to take a little bit more time to get to the deflationary standpoint. But from all the companies and retailers that I've been speaking to, a lot of them are now talking about deflation next year, not so much inflation.
And Arun, another big theme for the companies you cover are these weight loss drugs. Arun, obviously a tremendous amount of investor curiosity, interest in those drugs. You can look at the stock charts of Eli Lilly and Novo Nordisk. How do you think about, Arun, how those drugs are going to potentially affect the companies you cover? Not so much, near intermediate term, but even long term, Arun. What's the risk for those companies, and how are those companies responding right now?
Yeah, I think the near-term reaction to these GLP-1 drugs are a bit overblown. If you look at the stocks for a lot of consumer-related names, a lot of food-related names, they're down significantly ever since that topic became pretty popular a few months ago. But that's something that really all companies are monitoring still. It's too early to tell the exact impact in terms of food and beverage consumption. It could, over time, it could have a modest impact on food consumption. Maybe 1% to 3% of total food intake could be down over the longer term. But I think the good news for at least food manufacturers and food retailers is that they have time to prepare for this. This is going to be potentially a theme that we'll be talking about for the next decade is these GLP-1 drugs. And what a lot of food companies will likely do is they'll reevaluate. They'll potentially introduce more smaller pack sizes, for example, or maybe they'll change their ingredients in some of their food products. Maybe some food companies will sell off some underperforming brands and try to acquire some higher performing brands. So I think the good news is that they have time, and nobody needs to make any drastic decision right now in terms of maybe exiting certain product lines or brands or things like that. Nothing extreme has been done yet. So I think everyone's really just monitoring it and waiting for any impact on sales or margins.
And Arun, before we let you go, I know you have holds on a lot of the companies, the food companies in your coverage universe. Is there anything that you have a buy on that you think is going to do a little bit better going into next year?
Yeah, so I mean, during this whole GLP-1 popularity, when a lot of these food-related names got hit pretty hard, we did make some upgrades in packaged foods. Our top pick in packaged foods is Mondelez. They're, in our view, the best management team amongst packaged foods. Consistent execution, solid dividend. They buy back shares. They're really big in emerging markets, which is where the growth really is. And first and foremost, they're a snacking company, and that's historically been one of the fastest growing areas of the grocery store. So Mondelez is our top pick in packaged foods, and our second pick is the Kraft Heinz company. And we also made an upgrade to Kraft Heinz a few months ago from a hold to a buy. Kraft Heinz is a buy, but Mondelez International is a strong buy for us.
Arun, thank you as always for coming on the show. It's always good to see you.
Yeah, thanks for having me.